You started.
Start the event
No,
with
not.
record.
Don't start.
Good evening, dear members. Welcome to the next important CP event on the topic which personally affects all our income tax returns in India. So it is very important that we as NRIs know what are the correct implications, how to file it correctly, and what are the tax saving opportunities available with us. So let us begin our session with our ICAI motto song. I request you all to kindly stand.
Yeah, by share.
All members, please be seated. Now let us acknowledge our sponsors and supporters who have contributed a lot in our chapter activities, starting with our title sponsor B&W Developments, corporate support OQGN, silver support Deloitte, Murray, Premier Brain Globals and Jindal Steel, tax partner JSR Tax Advisor, cybersecurity partner Tech Deliver, technology partner Tally, bronze support Abu Temam Grant Thornton, GAC Motors, our corporate members in that silver members PwC, BDO, Muscat Overseas Group, and lastly regular members Crow, Al Naba Holding and Arabian Industries. We thank all the sponsors once again and hoping to continue with them in the next year. Moving forward, I would like to present one video which you would have seen in the group already.
Celebrate your continued association with the ICAI Muscat, Oman chapter by renewing your membership for 2026 to 2027. Members who renew by March 31st, 2026 will receive a silver coin at the AGM. This is our way of thanking you for being a valued part of the chapter. Stay connected, stay involved, and renew today.
So I hope the participants who are attending, they would have already paid the fees. If not, today is the last day. I would say last few hours, not even the day. So please pay before 12 o'clock so that you are entitled for the coin. And it's not about the coin or its value. It's about your support to the chapter. More the members, more stronger we are as a community. So please pay if you're not paid already. And the chapter bank account detail is already there in the flyer, to which you can transfer. Still, if you need any detail, feel free to reach out to me or any other committee member. Moving forward. So we have a lot of events lined up in April and May. We have event on global mobility and international reach. We have our Omani CFO mentoring program in Muscat. Date will be finalized soon. We will have another regulatory framework topic in April or May. We are speaking with the speakers for their availability. And we will be having our AGM in the first week of May, wherein we will all get the silver coin, which I showed. And we will also have a session in May on Global Capability Center, which is a hot topic as of now. And in addition to these topics, if you have any further ideas or the topic which you feel is relevant, will be helpful to our member, feel free to suggest topic or even the speakers. We welcome your ideas and thoughts. Moving forward, now I will invite our chairperson, C. Unmesh ji, to deliver a speech. And I would do on his behalf.
So let us see how many are attentive. So you can probably use the reaction button to clap. So see, Palakji, we have a trend here. When I raise my hand, people, all the members clap. So that's the new trend we have set from last 1 year. Okay, thank you, everybody. So good evening, everyone. A very warm welcome to our speaker, Palak sir, and to all of you. Today's CP session is on a topic which is very relevant, practical, and for many people it is stressful. The NRI tax return filing. We all know that taxes is the cost of civilization. And there is no better verse of Mahakavi Kalidas in the Raghuvansham, where he describes King Dilip's taxation policy. He says, Prajanameva bhutyartham satabhyo balimaggrahit sahasragunam ustrustam adattehi rasam ravihi. That means the state collects the taxes just as the sun draws moisture from the soil, only to return it 1,000 times as rain. So that's the beauty of taxes, and that's the discipline he mentions. Now let's be honest with each other. The word tax return does not usually create excitement, right? It creates reaction, and for some it creates confidence, for some it creates confusion, and for many it creates a very practical thought. Let me send it to my CA friend. Let me ask question to all my members. How many of you file return, your income tax return on your own? May I have a show of hands? Oh, many. Oh, many members file on their own. Fantastic. But I must confess that I am a chartered accountant, obviously. But when it comes to filing my own tax return, I go to another chartered accountant, my friend. I feel he's more experienced and obviously more reliable because probably I've lost the touch. We discuss about compliance, interpretations, documents, deadlines, technicalities with great authority. But when it comes to our own return, we quietly message a friend and say, boss, please have a look. तो उसके लिए एक दो लाइनें हैं, अर्ज करता हूं. मांग कर रोशनी औरों के चरागों से न चले. मांग कर रोशनी औरों के चरागों से न चल, अपनी राहों के अंधेरे को खुद आफताब कर. That means do not walk by borrowing light from others' lamps, but convert your own path into sun or light. So today's session is important, not because that all of us want to become expert in tax filing, but we should be little more aware, we should be little more independent, little more confident when it comes to our own compliance. Because return filing is not just about uploading numbers, it is about understanding what question to ask, what details to check, what documents to keep ready, what doubts to clarify, and what mistakes to avoid. And for NRIs, this subject becomes even more relevant. There are practical questions, there are recurring doubts, there are often small issues which are ignored until the last minute. And as we all know, the last minute is where the compliance becomes emotional. Some people file tax returns with preparation, some file with confidence, some file with prayer. Madam ji sawal na pooch le. That is why the sessions like this are very valuable. They help us move from confusion to clarity, from dependence to understanding, and from hesitation to informed action. I think the real benefit of today's session will be that it addresses the very question that people often hesitate to ask. What are the common doubts NRI usually face? What are the common mistakes people make year after year? And what one should keep in mind? What are the practical do's and don'ts? And even if someone is taking professional help, that should be still understandable. However, we should be in a position to understand what we are actually going to submit. So the message for today is very simple. Outsourcing filing is fine, but outsourcing of understanding is not. The goal here is not that everyone becomes expert, but we are not blindly dependent on somebody. And I think the better return begins with better awareness. एक दो लाइन है उसके लिए बोलता हूँ, जिंदगी का हिसाब रखते हैं, जिंदगी का हिसाब रखते हैं, हम भी क्या क्या अजाब रखते हैं. I'm sure today's speaker will demystify the subject of tax filing with relatable and useful information for all of us to understand. और एक पैरोडी बनाया मैंने विथ योर परमिशन पलक सर. बोलता हूँ, खुद का रिटर्न तू कर बुलंद इतना, खुद का रिटर्न तू कर बुलंद इतना कि मैडम पूछे ये टैक्स बचाया कितना. ओके, खुद का रिटर्न तू कर बुलंद इतना कि मैडम पूछे ये टैक्स बचाया कितना. And at the end, for every session, Sujal ji, we always end my address with the slogan: East or West, Indian CAs are the best.
Best.
Over to you, Jay bhai. Thank you, sir.
Thank you, Unmesh ji. And today's session perfectly meets our theme of knowledge is supreme strength and CAAI charting accountability with artificial intelligence. So today we have a human intelligence with us, a leading text group who will be taking further. So before I play the AV for CA Palak Pavagadhi, I would like to introduce him personally. I call him Sir because he is the one who taught me direct tax at all the levels of CA in CPT, PCC, and even final. And it's great to connect him after so many years. And I'm sure you will find this session worth attending. So I'll play the AV for the CA Palak Pavagadhi.
We are honored to introduce CA Palak Pavagadhi. He is a chartered accountant and law graduate and the founder of Pavagadhi Shah Associates with offices in Ahmedabad and Mumbai. With over 26 years of rich professional experience, he leads in direct tax, advisory, audit, overseas investment, and management consulting. He is a rank holder and gold medal recipient in both chartered accountancy and university examinations. He has served ICAI as a co-opted member of the Board of Studies in New Delhi, as a member of the Corporate and Allied Laws Committee, and on the Financial Review and Restructuring Board, reviewing listed company financial statements. At the global level, he represents India on the Investment Committee of the Global Business Roundtable and GFFJ, a South Africa-based philanthropic association. He is a mentor to thousands of young chartered accountants, a sought-after national-level speaker on direct taxes, and a regular columnist with the Gujarati newspaper Gujarat Mail. Please join us in welcoming CA Palak Pavagadhi.
Welcome, sir, to our event.
Could I?
Yeah, welcome, sir, to event, and the platform is all yours.
Thank you. Thank you, Jay bhai. Chairperson Unmesh ji, Vice Chairperson Sangeeta ma'am, CP lead Ajil ji, who is coordinating with me and cooperating me with all my queries. Badri ji, Gaurav Kapoor ji, Ashish ji, Jai Bhai, my dear friend, with whom I have a connect since more than 2 decades, and seniors in the profession and my dear friends. It is indeed a pleasure for me to address this particular August gathering, and I'm indeed thankful for this opportunity given to me by Muscat, Oman chapter of ICAI. Coming to the subject proper, the income tax returns, Indian income tax returns. See, the things are totally changing in India. Let me start with the development of today itself. Last year, there were certain controversy related to late issue of ITR forms, and hence people were expecting the date extension. We all are aware that last year, in place of 31st July, the date was extended to 15th of September, and then it was further extended by a day, that is 16th of September. It was voluntarily extended. But the forms were released late, and that's the reason there was an extension. This year, financial year 25-26, for which we'll be able to file the return now onwards, our Indian government has issued the form today itself. So it is 31st of March only. They are coming out with all the ITR forms, and the utility would also be made available soon to file the return. Now, coming to the due date first for income tax return. Last year, there were 2 main due dates, actually 3 main due dates. Let me clarify all the 3. For those who are not required to get their books of accounts audited, the due date was 31st of July 2025 for financial year 24-25. For those who are required to get transfer pricing audit, the audit report need to be filed up to 31st of October, and the income tax return need to be filed up to 30th of November. And for other audit, the audit report need to be filed up to 30th of September, and the return need to be filed up to 31st of October. Current year, there is slight change by the government. Government says, Indian Income Tax Department says that for those who are non-audit assessee but having business income, there is no audit, but they have business income, they would file the return by 31st of August 2026. So there is 1 month extra time given to them. And returns are also, forms are also issued well in time. For non-audit and non-business income, the return need to be filed up to 31st of July. And for audit, same rule, transfer pricing audit, report 31st of October, return 30th of November, and others 30th of September and 31st of October. So there are different due dates which are prescribed in the current year. As far as forms, I have said that they are released today itself by the government. We'll be analyzing which documents you need and what are the precautions to be taken while filing the income tax return. Whether my screen is visible, dear members and seniors? Yeah.
Yes, sir.
So let me begin. Let me first, see, I've divided my presentation into different parts. There are certain fear in the mind of those who are having income in India, but those who are non-resident and having income in India, that what would happen? Am I supposed to have this compliance, that compliance or not? Let us start with that. First thing, and that is Aadhaar PAN linking. I am resident in India. So if I have not linked my PAN card with Aadhaar card, then in that particular case, I would not be allowed to file the return. It's mandatory for me, for the resident. They have to have Aadhaar PAN linking, which is mandatory. But for non-resident, you may have your Aadhaar card in India. It's very good that you have the Aadhaar card in India. If you've linked your PAN card and Aadhaar card, fantastic. But if you have not linked, then there is nothing to worry, not to bother, not to worry. For non-resident, it is not mandatory. So the first clarification I would like to give is, it is not, if you have linked, it is very good. But it is not the compliance compulsion to link Aadhaar and PAN for the non-resident. We always advise that if non-resident has got Aadhaar in India, obviously he must have PAN in India, then they should link the same. Because linking will give number of benefits, like you can verify your return with Aadhaar OTP. You can have number of other benefits. So we always advise, but if you have not linked, it would not be mandatory for you. That is first important thing for the compliance. Second, there are certain CRS for the international tax transparency. There is tax treaty. Treaty may be related to exchange of information. Treaty may be related to giving some relief. We will be discussing at a later stage. But these treaties are prepared as per OECD guidelines. OECD has also given certain common reporting standards, which automatically exchange financial account information between various countries. And the purpose of the same is to prevent the tax evasion and protect the integrity of the tax system. This covers all the foreign residents, not only US person. We have the second,
जिसकी एक हंसी ने उसे
that is,
रातों रात स्टार बना दिया। तेलंगाना का एक सिंपल सा लड़का जिसका नाम है अरुण कुमार।
there is a provision called Foreign Account Tax Compliance Act, which would be applicable only to US person. But this CRS reporting covers all the resident of all other country. So that what would happen is that Oman or UAE or Singapore may have the information of you earning the income in India. If I am resident and I have some income in Oman, or I have some income in USA, or I have some income in Singapore, Indian government would be having the knowledge because of this particular standard. So this is for enhancing the international tax transparency. These provisions are came into provision have been made applicable. Now my second part is sale purchase of immovable property, because I have seen that many non-residents, those who have migrated from India to UAE, India to Oman, India to Singapore, India to African countries, wants to buy the immovable property in India. We'll try. This is a compliance topic. And as Chairman Sir has rightly pointed out, that when you listen to that you have to file the return, or when you listen that there are some compliance which are required to be made by you, then it's always burdensome. I agree with that same, that if the client is coming to our place for getting his return filed, he is coming because it is a compulsion. But I always believe that if you make compliance in a better manner, then it would lead to less litigation. Like sale and purchase of immovable property in India. I'll start with one practical illustration. And we'll discuss this practically so that the compliance topic will not become boring. There is an area in our Ahmedabad called Maninagar, wherein there is a street vendor who is selling khaman dokla. You may have heard, one of the favorite dishes of Gujarat. We are filing the return of that street vendor. And there is an accountant who comes to our office for getting that return file. He meets my office person and he gets the thing done. I've never met him. One fine evening, he called that person of my office, that fellow who is sitting inside. अंदर जो साहब बैठते हैं, कुछ later आया है. There is some later received from income tax department. Would he be able to reply? My person said, okay, you come and meet. He came with the letter. There was a person who was staying in India since, staying in India up to 1993, has migrated to Kenya, earned income at Kenya, but he wanted to make investment in India. So he transferred money from his Kenyan bank account to Indian bank account. As he transferred the money, it was approximately 7 crore of rupees in Indian convertible rupee value. He transferred Kenyan shilling to Indian rupee. And from that, he made simple fixed deposit and he purchased an immovable property. Our income tax department, Indian income tax department, issued the notice to him asking that please prove the source of the remittance made by you from Kenya to India. Indian income tax department issued the notices online, no reply. Second notice, third notice, fourth notice, no reply. They were passed a proposed order making addition of full 7 crore rupee on the ground that it is unexplained money. Unfortunately, the law in India for unexplained money is that it would be taxable in India at 78%. Now, from 1st April 2026, again, the tax rate is reduced to 30 plus plus plus. So it comes to half, that is 39%. But earlier, for the year for which his case belongs, it was 78%. So I checked the proposed addition order and I said that you are too late, but still we can try. We tried, but at last moment, the reply of the AO is you are not probable to give the document properly, because I had to give the reply next to next day, on the very next to next day. So I could not gather the document. They made the addition, matter went up. Now the matter is before the ITAT, before the Honorable ITAT. I could produce all the proof that, sir, there is a debit in Kenyan bank account, there is a credit in Indian bank. Then again, I am asked that proof that he is staying there. I gave the return of Kenya for last 5 years. Then they said, then which year he went there? I said 1993. I gave the proof. They said Kenyan citizenship or Kenyan residency certificate. I gave it from 1998. And now almost the matter is done. Order is awaited. What is the fault of that non-resident client? Nothing. No fault. The fault is only he did everything very genuine, but he did not reply to the notice. And last moment when he came to us, we could not give proper document. Now we are giving proper document and the things are now to be streamlined. But it took around 1.5 years. We consultants, I mean, same with all of us, that we consultant feel that it is an unnecessary burden. But for client, it is along with burden. He's got a tremendous mental pressure. It's just like if we have some, I would say, some simple disease. Say I have some headache. Still, I am afraid I have some chest pain due to, say, acidity. I am afraid I go to doctor. Doctor will tell me that there is nothing wrong, but still I would get afraid. Same is the position. Client is in our place and we are at the place of the doctor. So client was tremendously afraid. To avoid this, let me check out that if some non-resident wants to shift the money to India and buy the property in India, or if they are selling the property in India and they want to take the money to Oman or they want to take the money to Singapore, what are the way out and how it need to be reflected in the ITR? First point is that if you are having immovable property in India, say residential house in India, or you have non-agricultural land in India, and if that particular property is there with you since 24 months, it would become long-term. You have listed equity shares, you have equity mutual fund. In India, it will become long-term if it is held for more than 12 months. In India, from financial year 25-26, long-term capital gain is taxable at a flat rate of 12.5%, whether it is immovable property or whether it is listed shares, securities. Short-term capital gain on listed shares and securities is taxable at 20%. All other will be taxable at normal rate. Normal rate means slab rate. I'll be elaborating on the same. I'll be coming to the same slightly later, but it would be at the slab rate. So if, let us first analyze, you are selling off immovable property in India, then what are the documents you need? Please have your passport. Passport is necessary for the identity that you are NRI, OCI, or PIO. If you are here and selling off your property and doing the documentation, fantastic. Else, you need to authorize someone by giving a valid power of attorney. Provide an Indian and overseas address proof for the purpose of documentation. Say in old days, there were property in India in cooperative society, so you need to have the society document. Most importantly, get your PAN card ready. Ensure that the taxes on gain or return for the gain is filed. Get your sale deed properly drafted and get it registered for the purpose of transferring the property from you to the buyer. And before you get it registered, your property must be free from any of the loan or free from any of the, I would say, charges or any of the, I would say, mortgages. So here you have to have these documents ready when you come to India to sell the property or you are selling through POA holder. Now, when you are selling the property and you are non-resident or your client is non-resident, the buyer in India will tell you that I will make withholding of tax, which we call in India TDS. We have old 195, old act. From tomorrow, it is new act section 393, which says that if I am buying the property from some non-resident, say, let me assume Jai Bhai is non-resident, he is selling his property to me. I am buying his property. I am a resident, Jai Bhai is non-resident. So while buying the property, say for example, I'm buying the property at 60 lakh. While buying the property, I will make withholding of tax at the rate of 12.5% plus applicable rate of surcharge and cess from full 60 lakh rupees. So I will give to Jai Bhai 60 lakh less 12.5%, that is approximately 7.5 lakh. I'll give you 52 lakh 50,000 as consideration and 7 lakh 50,000 I'll deposit to Income Tax Department as withholding of tax for Jai Bhai. What here important is that this 7 lakh 50,000 which I have deposited, for deposit, I need to have PAN number of Jai Bhai in India. With that permit account number, I'll deposit this. And Jai Bhai, when he files his return, he is going to get the credit for the same. And he'll have to pay less tax or he'll be able to get the refund. I'm coming to the same. Now, the second very important point is that when I'm buying the property and Jai Bhai is selling the property, if we are planning our transaction in advance, we can get the help of two different subsections. And this is very important. This you can always advise your client. Buyer can apply, that is me in our case, can apply to the Income Tax Officer India that, sir, 60 lakh is my purchase price, Jai Bhai sales price, non-resident sales price. Capital gain tax is leviable only on sales price less cost price. Let me assume the cost price for the particular property is 20 lakh. So in India, the tax is leviable only on 40 lakh. But Section 195 says that the withholding of tax is required to be made on the sales price, because as a buyer, I would not be knowing what is the cost for Jai. So I will make, in the normal circumstance, withholding on 60 lakh at the rate of 12.5% plus. But if we plan the transaction in advance, Jaipai can give me the cost. I can apply to AO. I can tell him that, look, sir, my purchase price is 60, but the seller has got 20 lakh rupee cost price. So he'll be subjected to the tax only on 40 lakh. Allow me to withhold the tax only on 40 lakh and not 60 lakh. If income tax officer allows me, I will make the withholding only on 40 lakh rupees, which would be a benefit to you, because ultimately you are going to file your return at 40 lakh and pay the tax on 40 lakh. If I withhold the tax on 60 lakh, on the remaining 20 lakh, which I withhold extra, you have to get the refund from our Indian income tax department. And that would not be a difficult process. Don't worry. But your money is lying with income tax department. Assume you are selling off your property on 4th of April 2026. So withholding done by me on 4th April 2026, you are going to get the refund when you file the return next year. That is tax year 26-27. का आप जब return भरोगे in say July 27 or August 27, at that time you can claim the refund, and within maybe a month or two you will get the refund. So why to keep the money deposited in Indian government account? 195.2 is a good rule. Same way 195.3. If I don't cooperate, I tell Jaibai that, no, sir, I'll deduct the TDS on full 60 lakh. It would be open for you also through some of your professional colleague, or maybe now it is available online also. You can also apply to Indian Income Tax Department online that, sir, allow the buyer to withhold the tax, not on 60, but 40 only. I am giving my documents to. So here, very important to note that general rule is it would be on 60, but 195.2 for buyer, 195.3 if buyer doesn't cooperate. Seller himself, the NRI, non-resident himself or herself can apply for the same online and can get the withholding done only on the gain amount, not on the total amount. A very beneficial provision as of now. Earlier, what used to happen was, when the non-resident is selling off the property in India, the withholding was done at the rate of 20%, which was the tax rate on the long-term capital gain. Now, from 23rd July 2024, this tax rate is slashed to 12.5%. So withholding would be done only at 12.5%. But earlier, there was a benefit of indexation available. That is the present value of the asset on the basis of the index number provided by our country. That benefit, mind well, is not available to non-resident now onwards, from 23rd July 2024 onwards. So there is a big misconception with many non-resident that we have two options: index, to deduct index cost and pay the tax at the rate of 20%, or to deduct actual cost and pay the tax at the rate of 12.5%. No, sir. Those two options are not available to you. Those two options are available only to those assessee who are resident Indian. For non-resident, it's only actual cost, but the tax rate is a concessional rate, that is 12.5% only. That is one. As I have said, you have sold the property. You got 60 lakh credited, Jaibai, in your NRO account. Now, with this NRO account, can you remit the money to outside India? Or obvious, yes. You can remit the money. And remit this money outside India should be as per Foreign Exchange Management Act. It's simple compliance you need to have. The compliance is, while remitting the money from Indian NRO account to your Oman account or Singapore account or Kenya account or USA account, there is 15 CB and CA to be filed. CB to be filed by with the signature of the chartered accountant, and bank will give form 15 CA, and there important is that here they will be subjected to remittance. Generally 15 CB is for the rate of TDS. So what happens here is you are supposed to prove that the money you are remitting from India to outside India is the money on which tax is properly withheld. Tax is properly paid, and hence you can easily remit the money. And for non-resident, the limit prescribed by Reserve Bank of India is $1 million in a particular financial year. So you can remit this particular money outside India. Here, this is related to sales of the property. Now, many a times it so happens that when non-resident is coming to India for the purpose of selling the property, he doesn't have any other income. He's staying in, say, Oman or UAE, Dubai, or he is staying in Abu Dhabi, or he's staying in Kenya or Singapore since years. He's not been to India. He has some property of his forefathers, which he has inherited, and now he's coming to India to sell the particular property. He has to check out, he has valid PAN number, preferably linked with the Aadhaar. But if he has valid PAN number, then the rate of TDS is going to be 12.5. Otherwise, the higher rate of TDS will apply. So, as I've said earlier, when you are selling the property in India, it would be advisable to have the checklist of the documents which you need to have a smooth transaction. This was related to sales and taking the money to outside India. Now, you want to buy the property in India. Buying the property in India will not lead to any tax, and you don't have to show this in your return of income. But if you have sold the property in India, like Jaiba has sold the property at 60 lakh, he has to file his return of income even if the withholding is done. He has to file the return showing 60 lakh as the sales price, 20 lakh as the cost price, and 40 lakh as his capital gain, on which 12.5% plus tax applicable, less withholding of tax, less net tax payable. So filing the return would be obligatory. Now, you may have a number of questions. Question number 1. If Jaiba has sold the property in India, say residential house, and he wants to buy another residential house in India, can he get some benefit? Yes, there is a section called section 54. If you are selling the residence and buying new residence, you can enjoy the exemption to the extent of the cost of the new house. You don't have to pay any tax. Or you don't have any capital gain, and on that you can save the tax. That is one. Second, if you don't want to buy the house in India, you have sold the residential house, is there any other way out to save the tax? Yes. There is another section called section 54 EC, wherein you can park the fund in the government notified bonds, which is giving very less interest, maybe 5.25%. And that interest is also taxable. That is called REC bonds, Rural Electrification Corporation bonds, or CDB bonds. You can buy those bonds and you can enjoy the exemption up to maximum 50 lakh of rupees, and you can save the tax. You may have a question that, sir, all this possible when you were talking about that lower tax certificate which buyer can apply under 195(2) and seller can apply under 195(3), this particular slide? Yes. If you pre-planned this, you can give the undertaking and there may not be any TDS. But that is very exceptional. Getting the cost reduction and getting the TDS done on 40 lakh is simple, but to convince the Indian Income Tax Department of having the future plans of buying the house, unless you have given the token or unless you have entered into agreement to sell, it would be difficult for you. But yes, you can have that benefit. Now, you want to buy the property in India. At present, scenario is different. Many persons from from India or maybe other part of the world is investing in Oman, in Saudi Arabian countries as of now. But say, for example, you want to invest in the asset in India. Can non-resident buy the immobile property in India? Answer is yes. There is no problem. Can they buy commercial property in India, office or godown or warehouse? Yes. Can they buy agricultural land in India? Answer is no. Can they buy plantation property? No. Now important. Can they buy farmhouse in India? Answer is no. You will say that, sir, I was having the plan to buy a very beautiful farmhouse in India and come to India for 2 months or 3 months in my retired life. If I'm not allowed to buy the farmhouse, then is there any way out? Seniors and my dear friends, when I use the word farmhouse, I'm talking about the farmhouse in the real sense. It should be farmhouse, not the farmhouse which we all are understanding. If you have bought land in India, non-agricultural land, and you want to construct a big villa, which you want to call farmhouse, it is perfectly permitted. So which farmhouse is not permitted? The farmhouse which is in the immediate vicinity of agricultural land and which is used for storing the agricultural product is defined as farmhouse under the Income Tax Act. Those farmhouse you cannot purchase as you are not able to buy the agricultural land. But non-agricultural land, villas, your weekend home or your holiday home, which we in the which we in the common language called farmhouse, definitely you can buy the same. From where to buy the property? A, you can remit the fund through the legal channel to your NRI account, NRO account, or FCNR account and buy the property in India. Always, when you buy the property in India, the payment is to be made in Indian currency. In spite you are remitting the foreign currency to India. In India, it would be converted into Indian currency and you are able to buy the property in India. So that was related to buying and selling the property. Am I going on the right track?
Yes,
Is proper?
Yeah.
Okay. So the next point is now directly on return, and that is double taxation avoidance agreement. There is Tax Treaty of India with Oman as well as other Saudi Arabian countries. It's a comprehensive agreement, and that comprehensive agreement talks about the following income. We have Article 15. The same would be the thing for the UAE also. Mostly the article number also would remain the same. Clause may change. But it says, if a resident of Oman sells immobile property located in India, resulting capital gain will be taxable in the country where the property is located. Meaning thereby, if Jai Bhai has sold a residential house in India, Jai Bhai is resident Oman, not resident India. Still, on the sale of the property, the capital gain tax is leviable in India. So it is not resident country, but it is the country where the property is located or income is generated. Same is the rule for the rental income. If you are getting the rent of residence, you are getting the rent of office, you are getting the rent of commercial property which you have invested in India, or you are getting the rent of warehouse, go down. In India, it should also be taxable in India. Capital gain, as I have said, is taxable at the rate of 12.5% if it is long-term. Long-term means held for more than 24 months. If it is short-term, it would be taxable at the normal rate. Rental income would be taxable to non-resident in India as per the tax rates applicable, which I am covering up. This is most important. Many non-resident, especially from UAE and Oman, are investing in the mutual fund in India. This big catch. If investment is made in mutual fund by the non-resident in India, then capital gain on the mutual fund, unlike property, capital gain on the mutual fund are taxable only in the state where the individual is resident, that is Oman. I'll clarify. If, say for example, that Unmesh sir has invested, who is resident Oman, has invested some money in, say, Indian mutual fund, and he has sold this particular mutual fund. Gain arising on the same will be taxable to Unmesh sir only in Oman as per the laws of Oman. India, it would be tax exempt as per clause 6 of article number 15. This is very important. This many were not knowing. Same provision is there in Indo-UAE treaty, that gain on mutual fund will be taxable only in the resident country and not in the origin country, not in India, but in Oman or in the UAE. Important is that when you are selling off the mutual fund on the sales price, what happens is that the mutual fund company deducts the TDS at the rate of 12.5%. I'll go back to that earlier slide later. They'll deduct the TDS. They'll deduct the TDS at the rate of 12.5% or at the rate of 20%, depending upon the category, long-term or short-term. They'll deduct the TDS not on the difference between sales price and cost price, but they'll deduct the TDS on whole sales price. Would it be possible for you to get the refund for the same? Answer is yes. You can get the refund. Like Unmesh sir has sold the mutual fund worth, say, 50 lakh in India. There is withholding of tax on 50 lakh worth, say, 20%, assume it is short term. And there is tax withholding of 10 lakh in India plus applicable cess. When you file the return, you can say that this is not taxable in India, it is taxable in my resident country, withholding 10 lakh, I am eligible to get the refund, and yes, you will get the refund for the same. But it would lead to another question, which is that assume someone has sold it in the financial year 23-24 or 24-25. He has already filed the return and he has made this particular mutual fund gain taxable in India. I'm not talking about dividend on mutual fund. I'm not talking about the gain on the sales. I'm talking about only gain on the mutual fund. He has already sold it as taxable and filed the return. And he has said that there is tax payable in India. And he got the credit of the withholding of tax TDS. He has already filed his return. Now, is there any way out to get the refund for the earlier year? In my humble opinion, no. There is no way out to get the refund. Why there is no way out to get the refund? Because you can get the refund only and only if you file your return either under 139(1), that is in time return, or under 139(4), belated return, or 139(5), that is the return which is called revised return. The time limit for the same has gone. So I afraid here the important thing is that as of now, you are eligible to file updated return, but in updated return, you cannot claim the refund. You cannot show anything lesser than what you have shown earlier. So that would be a difficult portion. That would be a difficult task, I would say. So that is one. At the same time, here, when there is rental income, it would be taxable in India. Capital gain, as I have said, there is rule, mutual fund, not taxed in India, but rental income will be taxable in India. Dividend would also be subjected to tax in India for shares as well as mutual fund. As far as the withholding of tax is concerned, it would be fantastic for us to get the refund for that mutual fund. So kindly keep that in mind. Income from interest is also to be taxed in India at the rate of 10%. So this was related to provisions of double taxation avoidance agreement. This takes me to the disclosure of asset. There is some question, would it be possible for us to file condonation application? Yes, under 119 2B, you can have the condonation petition, but the process is too lengthy and too difficult. But yes, that is perfectly. We generally don't advise unless it is a big refund. If it is 10 lakh, yes, that can be. But unless it is a big amount, we don't. Yes, you have to make the investment through NRI account, then only you will be able to enjoy the tax exemption. But we'll have the Q&A at a later stage also. You can raise it now also. Now also in the chat box. At present, our government is behind the foreign assets. My question is, as a non-resident, if you are filing the return in India, are you supposed to disclose all the foreign asset in India? Answer is no. Do not worry. This requirement is only for R, and there is a requirement only for ROR, that is ordinary resident. Meaning thereby that if an assessee is in India, individual is in India, and he is resident of India as well as ordinary resident of India, then he is supposed to disclose all the foreign assets in his Indian return wherever he is located. But this requirement, mind well, is not mandatory for foreign resident. When you are filing your return in India, or your client who is staying at Oman and he is resident Oman, he is non-resident India, having income in India, is filing the return in India, then that particular point of time he is not supposed to disclose any of his foreign asset in India. So do not worry about the same. He doesn't have to disclose this in India. He has to disclose his Indian income, the income which is taxable to him in India as his non-resident. For ordinary resident, the point is that if I'm ordinary resident of India, I'm globally taxed. Globally taxed means wherever I earn, I'm supposed to pay tax in India, subject to definitely double taxation avoidance agreement. But in the case of non-resident, only Indian income is taxable. So Indian asset, Indian income, that is more than sufficient. Whether the non-resident is supposed to disclose all the bank account held by him outside India in the Indian income tax return, answer is you don't have to. Because your foreign bank account, our Indian income tax department is not much concerned. What is important is you need to disclose all Indian bank accounts, whether you are having NRI, whether you are having NRO. You are under an obligation to disclose all Indian bank accounts, not foreign bank accounts. This would be leading me to the tax rate and straight to the return. I was having the background till now, and now I'll be taking you to the income tax returns. In our country, there are two tax regimes which are made applicable. That tax regime is important is that old tax, up to 2,50,000, it is not taxable. Up to 5 lakh, it is 5%. Up to 10 lakh, it is 20%, and thereabout, it would be at 30%. While new tax regime, big benefit given. That benefit is up to 4 lakh, there is no tax, and only up to about 24 lakh, there is tax rate of 30%. But in old regime, you can claim all the deductions. Like if you have invested in PPF in India, or you have invested PPF, it would be difficult for non-resident, don't advise. But if you have invested, if you have paid some life policy in India, or you have invested in the equity-oriented mutual fund in India, you will be able to enjoy certain deductions which are not available in the new regime. So, but still, I would say that it is always, as of now, beneficial that we file the return, even the non-resident file the return as per the new regime. There was a misconception that whether new regime is available to non-resident. Yes, it's available to individual HUF, maybe resident, maybe non-resident. Other benefits, if we talk about, available or not. My seniors and dear friends, last year, when the budget was presented, that was 1st February 2025 by our Honorable Finance Minister, Madam Sitaramanji, you must have heard that up to 12 lakh, there is no tax payable because of one rebate under Section 87A as per the old Act, and as per the new Act as under Section 156. Mind well, this 12 lakh limit for the new regime is not available to non-resident. This is available only to resident, and that to individual resident. So for non-resident, only up to 4 lakh, there is no tax payable. Above 4 lakh, you would be ending up paying the tax. Now, what can be included in this 4 lakh? This is very important, mind well. Assume that there is, Jai Bhai has got only one income in India, and that is that 40 lakh rupee long-term capital gain, which is taxable in India at the rate of 12.5%. Then whether Jai Bhai would be taxed on 40 lakh less 4 lakh karke only on 36 lakhs? Answer is no. For non-resident, any special rate income cannot go to the basic exemption limit of 4 lakh. Only normal rate income can go to basic exemption limit. You may have a question, what is normal rate income? Normal rate income may be rental. Normal rate income may be if you are having some interest income in India on your NRO account, because NRE interest is otherwise also exempted. All this will be taxable at the normal rate. If you have normal rate income in India, then only it would be eligible for that 4 lakh. Else, on first rupee, it would be taxable. Assume that Kurian sir has some short-term capital gain on equity shares in India. This short-term capital gain is taxable in India at the rate of 20%. Here, short-term capital gain of only 2,50,000. No other income in India, still he would end up paying tax on 2,50,000 because basic exemption limit from that 20% short-term special rate is no more, no longer, not available to non-resident. So that two things, 87A rebate, that is 12 lakh tak no tax, not available. At the same time, you are not even eligible to get any special rate income shifted to basic exemption limit. As far as other benefits are concerned, whether available or not, like if you invest in LIC or LSS, whether it would be eligible for deduction in India? Yes. Assume you are non-resident staying at Oman, but your family stays in India and you are paying your children tuition fees of any school or college in India. Would that be eligible for deduction in India while filing your Indian ITR? Yes. Up to 1,50,000 rupees. Important is that it would be available only and only in the old regime. That is 2,50,000 tak zero and then 5% and about 10 lakh, it would be 30%. There, all these benefits are available. You invest in pension plan available to non-resident. You invest in, you pay Mediclaim for your parents in India, eligible. You have some education loan taken from India. Now you are at UAE, you are studying there as well as you are earning there. You are non-resident. Can you claim that interest on the education loan in India? Yes. ATG in India? Yes. You have still, you have an NRO account in India on which you are getting the interest. Can that interest, if NRO saving is there, can that interest be eligible for deduction? Yes. But I would again say the same thing, that it would be available only and only if you are opting for the old regime, not otherwise. Same way, housing loan interest, if you have India loan taken from some Indian bank and you are paying, yes, standard deduction, yes. Other benefits, as I've mentioned here, yes. 87A rebate, no. 54, 54F, 54EC, I was talking in that property sale, yes, eligible for non-resident. Now, when you file the return, what are the chances if you have income in India and you are not filing the return in India? My seniors and dear friends, as of now, Indian Income Tax Department has got your access to all the financial transactions. In a lighter note, if I say, one of my very good friend who is MBA, he is resident in India. He is doing the job in some very good bank in India. He is getting his return filed from our office. He's my childhood friend. So he comes to office and sits with my interns, tell them that these are the detail I have got for salary, this, that. Get the return filed. My intern said that, sir, all these are okay, but you have some interest also from saving bank account with Bank of Baroda worth 840 rupees. He said, I am not aware I have any bank account in Bank of Baroda. My intern said that, sir, it is showing in AIS, that is called Annual Information System, which is linked with PAN. You've opened NRI account, NRO account, you've given your PAN number in India. Whatever the transaction happens are being reported to Indian Income Tax Department. You are in the scanner of Indian Income Tax Department and they are aware about each and every financial transaction of yours. You've got the shares of some company on which you are getting dividend. It is reported to Indian Income Tax Department. You've got the shares, you've sold it off, you've got gain reported to Indian Income Tax Department. In your case, there would be, in the case of non-resident, there would be withholding, but otherwise also it would be reported. In my case also it is reported, and we are knowing that what has been the transactions, financial transactions done by the client. So, if you have some income in India and that income is normal rate income, so as to say NRO interest or rental income, or you have some sort of business going on in India in your proprietorship name, which is run by someone else, and you have some income which is, to be honest with you, slightly risky nowadays. But if you have, it is all normal rate income. If that income exceeds basic exemption limit 4 lakh, then it would be obligatory for the assessee to file the return in India. If you have any special rate income of any amount, special rate so as to say long-term capital gains, special rate so as to say equity shares, short-term capital gain, then in that particular case, you are under an obligation to file the return right from rupee 1 I am repeating right from rupee 1 because it cannot be shifted to basic exemption limit. If NRI do not file the return, but before that, in certain cases, non-residents are exempted from filing the return. It is new section 216 and old it was 115. It says this way: if non-resident has either investment income or long-term capital gain, I'm not talking about short-term capital gain, or both the income. The investment income, so as to say dividend, investment income, so as to say interest. If you have dividend or interest income, or you have long-term capital gain in India, or both, and adjoining word is and, the withholding of tax is already done on the same in India at the rate applicable, and you don't file the return, it would be perfectly okay. The section itself exempts. So you don't have to file the return in India. But as I've said earlier, when you sell off the shares in India and having the long-term capital gain, withholding would be done on the sales price. You can get the cost price deductible. When you get the cost price deductible, your taxable gain would be lower. As your taxable gain is lower, you can claim the refund. For claiming the refund, it would be return filing is obligatory. Second, if there is some additional income, like your rental income also, return filing is obligatory. If TDS is deducted at a higher rate for refund, ITR is compulsory, income tax return is compulsory. If TDS is deducted at a lower rate, then also return is compulsory. So here, important thing is that you are supposed to file the return if you are not falling under the criteria of 216. In which form the non-resident has to file the return. The applicable forms are, if you don't have business income, ITR 2 with capital gain. If you have some business income in India, say for example, you've done some consultancy in India and you are earning the income in India, income accrues in India, even if you are non-resident, it would be taxable in India. Then in that particular case, your return, that is ITR 3, need to be filed by the non-resident. Which are the informations you need to give in your return? You have to give your residential status that you are non-resident. Now, how to prove that you are non-resident? You need to have tax residency certificate of your resident country. Maybe Oman, maybe Singapore, maybe Dubai, maybe Kenya, maybe African countries. Second, you have to have your tax identification number there, which need to be mentioned. While filing the return, be careful that you report all your taxable income in India. Maybe salary, maybe house property, maybe capital gain, maybe some consultancy income, maybe interest, maybe dividend income. Do not forget to claim the benefit of double taxation avoidance agreement. If you have business income in India, which is taxable in India as well as in your resident country, and you are able to get some tax credit in India, don't forget to claim those tax credit. And here, those who are non-resident, as I've said earlier, reporting the foreign asset is not compulsory, but reporting all the Indian assets or Indian bank account is obligatory. I was being specifically asked, and that's the reason I'm saying this. Is it advisable to get the service of chartered accountant for filing the return, or you can file your return on your own? I'll be very honest on this. As of now, filing of return has been made very simple. Like, what generally happens is that the consultant in India or consultant chartered accountants of India sitting at Oman or UAE are able to file the return of any non-resident Indian or maybe resident Indian without getting any detail from the assessee. If you have capital gain, if you have got the interest income, dividend income, or maybe rental income on which withholding of tax is already done, then we don't need any detail from the assessee. We can prepare the return on the basis of the details supplied to us by Indian Income Tax Department, that is AIS called Annual Information Statement or TIS called Tax Information Statement. But we always say that if you have simple income like interest dividend, you have very proper TDS in Form 26AS. You are not claiming any double tax avoidance agreement benefit in Indian ITR and you are filing ITR 2, that is non-business. Then yes, self-filing. You can file the return on your own. But if there is some treaty benefit which you need to avail, or you have some property sale transaction wherein you have to get the cost reduction or you have to claim some exemption, or you have some big refund due, or certain complex cases, then it would be definitely advisable to get a service from a qualified person, maybe tax consultant, maybe chartered accountant. So this is how one can file the return. As far as the documents are concerned, as I'm trying to tell you, that unless you have some consultancy income, and even if you have some consultancy income, it would be available with Indian Income Tax Department if withholding of tax is done in India. Then there is no requirement of any detail from the non-resident. Our Income Tax Department is providing all the details to us, and hence it would be pretty easy for any consultant to get the return filed. But the only issue which is happening in India to close, Chaibhai, I have 3-4 minutes for my portion.
Yes, sir. You have.
Yeah. To close, the laws are so much changing in India. Like, I give a practical illustration of buyback of shares. Till 30th September 2024, the rule was that if there is buyback by listed company or unlisted company, like our Infosys has bought back its share. Assume that Sunny Bhai has purchased these shares of Infosys in India at, say, 1500 rupee. It was bought back by Infosys at 1800 rupee. Then in that particular case, up to 30th September 2024, Infosys was to pay tax on the same, and that was under 115 QA of the Income Tax Act. As Infosys pays the tax, it was fully tax exempt in the hands of the shareholder, whether the shareholder is resident or whether the shareholder is non-resident. From 1st October, the law has been amended for buyback, which says that 1st October 2024 onwards, if there is buyback by the Indian company, maybe listed, maybe unlisted, from resident or from non-resident, then buyback price will be taxable under that other source as dividend, deemed dividend. It was under 222F of the Income Tax Act. And the cost incurred is eligible for deduction in the topic capital gain. To be more specific, Sunny Bhai has buyback between 1st October 24 to 31st March 26. of Infosys at 1800 rupee, full 1800 rupee will be taxable to you under the head income from other source at your applicable tax rate, on which withholding would be made by Infosys under 195. And 1500 rupee which you have incurred for buying the shares would be cost allowable in the topic capital gain. If you have some other capital gain, you can set off. If you don't have capital gain, then you have to carry forward 1500 rupee. But at present, you are taxed on full 1800 rupee. That is unfortunate. Now again, from 1st April 2026, the law is to be modified. From tomorrow, whatever buyback happens, that would be taxable in the hands of the shareholder. And where it would be taxable? It would be taxable under the head capital gain, maybe long term, maybe short term. And what is taxable is difference between buyback price and the cost price, meaning thereby it is 1800 and 1500. The difference, that is 300 rupee only, will be taxable as capital gain, but that would be applicable from tomorrow. So in the span of 2 years, there are 3 different provisions which would be definitely very difficult for anyone to digest. I tell you very honestly, in many cases, what has happened is, even if the buyback was exempt up to 30th September 2024, many of the assessee have shown that it is taxable in the hands of the recipient as capital gain, which was not correct. So as the provisions are ever changing, it's always advisable to get the help of the consultant or read the proper article or material before filing your Indian income tax returns. The filing season is starting from tomorrow, subject to the availability of the utility we call, that is a software for filing the return. I think it would be made available very soon by the government. And we have the time limit up to 31st of July, non-business, 31st of August for business for filing our income tax return. So over to you. Wishing all of you a very happy filing season, and hope that I'm able to add to the knowledge of the August gathering. Over to you, sirs.
Thank you so much, Palak sir, for such a simple and detailed explanation, point to point, which is the way of your teaching, I would say. So really appreciate. And even it's late in India, you are there with us, going so detailed. So really appreciate. What I will do now, I will read the questions from the chat box one by one in the order which they have asked. If you can clarify possible. Otherwise, if there's some complexity, we'll take offline.
For sure. You can start, Jai Bhai.
Yeah, I'll just maximize my window and read one by one. So you'll start with Sunny Bhai. Sorry, Sunny Bhai, I had to make you wait. You can unmute and ask, Sunny Bhai, your question.
Yes, Jai Bhai, thank you for giving me the opportunity to have a conversation with Palak sir after a long time. After 16 years, I am attending his lecture.
Nice to meet you. Nice to meet you.
Thank you, sir. I hope you remember me, sir.
For sure, I could recognize you by your face.
Yeah, sir. Sir, I have a few doubts which are practical, not related to the particular regarding the law, but as a NRI, we are done some transaction, like we are using credit card, which we have taken from India when we are resident. So is it advisable to use those credit card over limit, because it is come under the SFR reporting, I think. Under the
if you have some Indian credit card, say for example, you have the credit card issued by State Bank of India when you were in India, now you are at Oman or you are at Dubai. You are using that credit card. Our Indian Income Tax Department would have the information about the use of the credit card. And that too, unfortunately, you are using it outside India. So I don't say that there would be any addition in your case, but why to invite unnecessary notice from Income Tax Department and you give the clarification that, sir, I'm using it, but I'm paying it from my foreign source. I'm being non-resident. It is not taxable in India. So I would advise not to use.
Okay, sir, one more question. Like for Indian resident, it is mandatory to like one section, I don't remember the section name, 139 subsection, I think, regarding expenditure. If we are spending 1 lakh or more for travel, then you need to file compulsory return. So is there any specific section for NRI if we are spending more than 1 lakh, or like if we are spending, there is no such, because
No, sir.
since last 3 years we have not updated with knowledge of
No,
taxation.
no. I'll clarify why it is not there. See, what you are talking about is proviso to 139(1).
Yeah,
Which
right.
says that if you have electricity bill worth more than 1 lakh, or you have
1
cash
lakh.
deposit worth more than 1 crore in the current account, or you have the foreign travel worth more than 2 lakh, you are under an obligation to file the return in India. That is
Return.
applicable to resident. Now, the purpose is that there are many who are earning so much, expanding so much, and not filing the return. For the non-resident, it may not be the case. Indian government wants to tax non-resident only for their Indian earning. Now, from UAE, you are going to USA, or you are coming to India, expanding on your foreign travel, very handsome amount. But you being non-resident, if you are earning anything outside India, our government doesn't have any right to tax you. So there is no requirement to not worry.
So in this case, I think we need to avoid our credit card, because we are spending as an Indian credit card, or
Certainly.
yeah, we need to avoid this, because mostly people are. And for one more question regarding, sir, UPI, when we are visit India for 1 month or 2 months, we are done the payment for shopping and everything. We are using UPI, and we link that our NRE or NRO account. So is it advisable to use that account?
There's no problem. I'll clarify how.
No problem.
You would have, see, I can say that whether our Indian Income Tax Department will issue the notice to you or not is not certain.
Yeah.
Even anyone can get the notice. No one is
Yeah, right.
exception. But you would be able to prove that if you have linked your GPay or any other mode of payment with your NRE account or NRO account, and you don't have any source of income in India, it would be very simple for you to prove that, sir, I've expanded, I have not earned. You can tax my earning and not my expenditure.
Yeah, right.
Sure. So I'll take up the next
Oh.
question.
Can I ask Jai Bhai one more question?
Anyway, we go Ahmedabad together to meet, sir. Don't worry. Let me take other people's questions.
Just only one question
Go
regarding
ahead.
mutual fund regarding.
Go ahead.
As Palak sir explained that mutual fund are exempt for NRI.
Not NRI.
So, sir,
Oman and Saudi Arabian countries.
Oman or Saudi Arabian countries. So if I have invested, say, for example, 2 lakh now in a mutual fund, I will sell. Then is there any chances that DTAA will attract in this case? Because right now there is no tax in Oman up to 2028. So in this case, DTAA impact will come.
I'll put it this way, that if you have earned in Oman or UAE, it is applicable to UAE also. And you have invested in the mutual fund from NRE account, non-resident external account, and you sold it off, having the gain on the mutual fund, then DTAA between Indo-UAE, Indo-Oman says that it should be taxable in the resident country, as per the laws applicable in the resident country. Now, if there is no tax in the resident country, that is UAE or Oman, then there is no taxability anywhere, because India says that it would be taxed as, or the DTAA says it would be taxed as per the resident country, not in the origin country. Origin country is the country where the income earned originated, and resident country is Oman or UAE, so it would not be taxed in India. If there is no tax in Oman or no tax in UAE, that income is totally tax-free.
But there is, sir, one more concept. Then when it is zero rate, then
India will have charcha with sir in Ahmedabad.
Yeah,
there
I
are many questions of other members.
But still, you would not be paying the tax.
Yeah. Okay.
Anyway,
okay, sir. Thank you. Thank you. Okay. My question is done now.
Yeah. So, sir, next question is that whether one has to ensure that PAN of seller is active. If not active, say it's not linked with Aadhaar card extra, then 20% to be deducted as per CBTT circular, or
Yes. If your PAN is not active, then the TDS would be deducted at the higher rate. It may even not be 20, it would be higher than 20, double the applicable rate or certain percentage which are prescribed. So while selling the property, the slide which I was highlighting would be very helpful, useful, that ensure that your PAN is active in India.
Okay, noted, sir. Hope that answers the query. I'll take up the next one. Is it compulsory to deduct TDS when an NRI purchase immovable property from another NRI?
Very
If
true.
yes, then NRI purchaser need to apply TAN and submit TDS return.
I'll take 2 minutes to answer the same. On 1st February 2026 budget, there has been an amendment made that if I am buying the property from non-resident, I have to withhold the tax under section 195, as we have discussed, that I will withhold on 60 lakh from your property at 12.5% or that cost deductible. But it was obligatory for me to have TAN number. From 1st October 2026, I'm very specific with the date, 1st October 2026, that requirement for obtaining the TAN number for deducting the TDS under 195 is done away. But it is done away only when the buyer is resident. If the buyer is non-resident, like say for example, Kurian sir is buying and Jai bhai you are selling, then Kurian sir must have the TAN number in India to get the TDS done of yours at 12.5% and to get it deposited into the Indian bank account. So for non-resident, can non-resident buy the property from another non-resident? Yes, subject to TDS. And for the buyer, TAN number is obligatory, even after 1st October 26.
Got it. So next question was from...
we have to look at the tax status of the seller when you do the TDS, right?
Very true, sir.
Correct.
You have to look at the status of the seller. If seller is non-resident, then only 195 will come. Like I put it this way, being a buyer, non-resident, you are buying the property from, say, Indian resident. Then you can withhold the tax under 194 IA, old section, 393 new section, wherein the deposit is to be done in form 26 QB, for which TAN number requirement is not there, neither for resident buying from resident nor non-resident buyer and resident seller.
Yeah.
Thank you.
So next question was from our member Harsh, I think, which you answered. Can we file condonation of delay? I think you answered yes earlier. Yeah, Sunny Bhai's question is done. Next question is from our member Radhakrishnan. We can invest in mutual fund through NRO or NRE account. Believe the presentation assumes investment from NRE account. Please confirm.
Advisable is from NRE account. And then only all these benefits would be available. So yes, my answer is, it presumes it is from NRE account.
Yeah. Next question is, can you please clarify 10% tax rate on interest?
Yeah. See, there are certain conditions. If I be specific, it is old Act, section 115A1, Roman A, a small a, which says that if the non-resident is earning interest income or dividend income in India from source of the fund, which is foreign currency, like you have earned in Oman, you have remitted the fund in India from which you have invested and you are earning interest or dividend, the tax rate defined in the Act itself, Indian Income Tax Act itself, is 10%. And that's the reason, even if DTAA says more rate, still there is a clear-cut concept that whenever there is a conflict between DTAA and the Act, the beneficial provision to the assessable prevail and that beneficial provision will be 10%. But assume Indo-Oman Treaty says it is 7%, then it would be taxed at 7. Indo-Oman Treaty says it is at 15%, it is at 10%. But our treaty says it is also at 10%.
Correct. That's the same case even for services. Like in Oman, standard rate of withholding is 10, but as per DTAA, it's 15. Oman, India.
Oman, India. Okay.
Yeah.
So if I'm coming to Oman and providing some services, withholding would be at?
Yes, 10%. Unless I claim the benefit under DTAA.
Okay.
Yeah. So next question is from our treasurer, Ashish Bhai, that can you please elaborate on the requirement for claiming exemption on long-term mutual fund gain under DTAA in addition to TRC from Oman authorities? Which forms are required in India?
See, one basic thing which is required is you need to prove that you are non-resident and you are non-resident of UAE, or rather resident of UAE or Oman. For that, your basic proof will be your tax residency certificate, your TIN number over there, or tax residency certificate over there. There has to be withholding of tax on this mutual fund by the I would say asset management company, or by the particular entity wherein you have your mutual fund which are dependent. So to get the refund from income tax department was earlier a big task. Now there is no big task. Apparently, you have to prove that you are non-resident India and you are resident in Oman or UAE, which you can prove by way of your TRC. So I think there is no other compulsion. Your investment must be from foreign source, which you can prove when you have invested from NRI account. Your funds are remitted from foreign country to India, which are invested, now sold, you have the gain. So investment from foreign money and your TRC of the foreign country would be sufficient proof.
Yeah.
And without notice, they are issuing the refund.
Yeah. His second question is, additionally, is there any requirement to disclose our entire portfolio, including mutual fund holdings, basically mutual fund, equity shareholding, while claiming such exemption under DTAA?
For claiming exemption under DTAA, there is no requirement. But earlier it was 50 lakh. Now the limit is increased to 1 crore. If your Indian income in your ITR, taxable income in your ITR exceeds 1 CR, then you have to disclose your assets and liabilities in India. So there, your portfolio requirement. But for claiming DTAA, no, there is no requirement.
Okay. So if, let's say, if anyone's income is below 1 CR, let's say 90 lakh, then they don't have to disclose the entire wealth, portfolio and other thing, holdings.
Why to give it to income tax department? They have everything, but why we should give?
Okay, got it. And then another question.
You don't have to add chapters money which you're holding because he's our treasurer.
Sorry?
Ashish Bhai is our treasurer. So I just said that he need not add the chapters money which he's holding.
True.
Into his asset.
Yeah. His next question, I think down somewhere he asked. So sometimes the officer asks additional documents like this Form 10F, Form 67 for allowing the refund. So what are the precautions to be taken to get a smooth refund?
As far as Form 67 is concerned, if you are claiming any relief as per DTAA, then this form is mandatory. It is mandatory for the purpose of, rather the form is to be filed on or before the due date of filing of return. And then only you can claim the refund is the requirement of the law. But as of now, there are a number of cases wherein the judgments are available that even if this form is filed late, you can claim the refund. But as far as I understand, all these are required when you are claiming the refund under Section 91. 91 is the relief when there is no bilateral treaty or the income is not included in the bilateral treaty. Now, with Oman or with UAE, we have comprehensive treaty. A. B. As far as non-resident is concerned, 91 relief is also not available. 91 Section 91 relief is available only to resident if income is taxed in two countries and there is no DTAA prescribed. So for non-resident, those questions will not arise. For resident, definitely the question will arise. So if I'm resident and coming to Oman earning for 2 months, there is withholding at Oman, I have to declare that income in Indian return and I have to claim the DTAA. It is obligatory for me to file form number 67.
Yeah. And how about form 10F?
Same rule.
Same. Okay. So we'll move to next query. Next query is from our member Neil. If I'm a resident of India and own a property in Oman, reverse case, rental income from Oman property, can this qualify for exemption under DTAA or global income will be taxable?
Global income will be taxable. And whatever the concessional rate provided in DTAA, you can get the benefit. But I'm afraid it would not be possible for you to enjoy the full tax exemption. Not only that, whatever the property you are owning at Oman and you are resident of India, it would be obligatory for you to disclose this particular property in Indian return as foreign asset.
Noted. We'll move to next query. Can an NRI owning agricultural land acquired prior to becoming NRI
What?
sell such land and invest in another agricultural land while remaining NRI?
I put it this way. I was in India, I bought an agricultural land. I am an agriculturalist. Now I have been to Oman. I have become non-resident. Can I continue to hold this agricultural land? Yes. Can I sell off the agricultural land? Yes. But after selling whatever the money I get, would it be possible for me to buy another agricultural land being non-resident from this money? I have my reservations. You cannot.
Got it.
But Jai Bhai, people are doing this planning. As of now, one gentleman who is at US, a non-resident, wants to buy some agricultural land in his native. So he gifted money to his mother, who is Indian resident. Mother bought the agricultural land, who is an agriculturalist. Now mother has prepared the will, and by will, mother will be giving this land to that non-resident. Can non-resident inherit the land? Answer is yes. He can inherit the land. Ek. Can mother give the land to non-resident, agricultural land to non-resident? Answer is no. Gifting is not possible. Only inheritance is possible.
Got it.
And
Noted.
buying is also not possible.
Correct. That clears in detail. We'll move to next question. Can we change from new regime to old regime in any particular year or year after year? Like 1 year I select new, other year I select old.
Yes. If you don't have business income, that option is available every year. New regime is the default regime. If you want to go for the old regime, there is a requirement of filing Form 10 IEA, and there is a requirement that you need to file your return on or before the due date. So yes, you can change the regime. If you are into old and now you want to move to new, yes, you can move to new by opting out from the old regime.
Yeah. So there are many queries, but we'll take class 3, 4 because we have then Kahoot quiz for our members.
You can send it and I'll reply on email.
Yeah. I'll just take one, which is a bit long one. Our member, Mr. Ranga, has asked, a person who was a non-resident and having foreign retirement fund account returned to India and he became an ordinary resident. He did not submit Form 10EE and he did not offer the accrued income on his foreign retirement fund account in the year in which he became an ordinary resident. What are the possible adverse consequences and rectificatory actions to be taken?
Okay. I'll have to check out. I'm not sure.
Yeah.
But I put it this way, that in the year in which you become resident, that the first year, there is a section called 115I, I'm not sure, which gives an option to non-resident to get assessed, non-resident becoming resident, to get assessed as non-resident in India. So if you are getting assessed as non-resident in India, then again this income is not going to be taxable to you. But from subsequent year onwards, or if you are not able to get the benefit in the year in which you are becoming resident, I afraid the things will be problematic. But the relaxation here would be, Jai, in the first year of the particular person returning to India becoming resident, mostly he would be resident but not ordinary resident. Because for becoming ordinary resident, he has to be resident for minimum 2 years earlier from last 10 years, and he has to be in India for 730 days out of minimum 7 years. General condition, if we talk about, there are certain specific conditions which they have now prescribed, but general conditions are these two. So he, if becoming a resident but not ordinary resident, do not worry, only Indian income will be taxable and not the global income.
Got it. So then next query is from a member, Ritesh. Whether foreign asset disclosure is mandatory for NRI?
No.
And whether it is mandatory for resident but not ordinary resident? RNOR?
OR. It is mandatory for ordinary resident. See, I tell you the purpose. The purpose is ordinary resident is globally taxed. So I being ordinary resident of India, holding asset in Oman, holding asset in UK, holding asset in USA, holding asset in Kenya or Singapore, government would like to know, A, from where I have bought this asset. क्या कमाया भाई आपने सिंगापुर में जाके कि आपने asset ले ली? And as of now, am I earning any income on the same from this particular asset in Singapore or not? If yes, I am supposed to pay the tax in India. So that requirement is only for OR, ordinary resident.
Yeah. We have Ritesh also with us. Ritesh, do you want to unmute and ask him anything else?
Yeah, thank you very much, Palak sir. Palak sir,
Yes,
actually
sir.
the query came because in the slide there was a use of word generally. So in the beginning of the sentence, it was mentioned generally in case of NRIs and NROs, specific disclosure foreign assets is not required. So since the word generally was used, that's the reason I had a query. Is there a specific scenario where basically even for a NRI or RNOR, there may be requirement to give foreign asset disclosure? So that's a query.
There is only ordinary resident, sir, who has to disclose the foreign asset in India as of now.
Okay, thank you, sir.
Yeah. So last query, which is very short, but I feel it's very important by member Radip. For demat accounts also, status is needed to be updated if we become NRI now.
Compulsory. No one updates, but it is obligatory for you to update. Even in bank, people are not updating. They keep their saving account as saving account, FD account as FD account. I would request to get it updated as far as demat, as far as all the bank account is concerned.
Thank you. Yeah. Any member wants to unmute and ask last query before we move to quiz? Nirobha, you want to ask query? You can unmute.
Hi, Jay. I just have one query.
Yes, please.
Yeah.
Thank you.
Yeah.
Yes.
Hi.
So, Palak sir.
Yes, sir.
Like being an NRI, when we are filing ITR, do we have to report like foreign income? Because it's already like whatever remittance we are doing, it is there in the AIS. Whatever like purchase sale of the mutual fund equity shares, everything is getting reported, or FD transactions. So just want to be sure. I believe it would not be compulsory, but just want your confirmation.
What we need to report, sir, you said?
Foreign income, like whatever we earn.
Salary earned over here.
And one last thing, like can we open NRE account for minor and like PIS account?
Why not?
HUF, like can I have an HUF also? And so that's similar, right?
Yes, sir. You can have the HUF. Non-resident can have HUF in India and can do the planning.
Yeah.
Within the
I think
यहाँ से एकदम गरम से
Debate PIS, right?
Yeah. So regarding this HUF, I had a very strange experience with Indian banks. They are not aware of how to open the account for HUF, and then they're not able to support. And my HUF benefit is I've not used for last 10 years now.
Legally speaking, sir,
Yeah.
there is no prohibition for non-resident having HUF in India. Whatever the income you are earning in the HUF should be justified. There is no problem at all.
Yeah,
Correct.
mine was reverse. I opened last year successfully bank account as well as Demat. Yeah, it was
let's connect up.
non-PIS, not PIS.
Which bank, if you can?
Bank of India.
Okay, so it was not PIS, so it was a normal resident account, or how is it?
No, NRI account and Demat account was non-PIS.
So HUF account derives the status from the Karta. So if you are the
Yeah.
Karta of that HUF, then it will be derived based on your residential status.
Correct.
Very
Correct.
good.
I think Shalini ji, you wanted to speak. So
Yeah,
let us
just-
take that
Yeah,
roll and
just-
final.
Palakji, I just wanted to know the status of refunds. We haven't received a refund for last year. So what's happening there?
I tell you, ma'am, the issue over here is that if you have high refund, say in 6 figures,
Mhm.
then all the refunds were kept on hold, and government was issuing the notices or issuing the mails, not notice, I pardon my word, that you have made some high value transaction which you have not reflected. If you want to update your ITR by ITR, you do it.
Mhm.
No one has replied, and few refunds are being issued by the government. I was one of the lucky person who got the refund in that slot, in spite it was in very higher amount. But still, there are huge refunds which are not being issued by Income Tax Department. Do not worry. There is no problem of yours as well as your filers. If someone else has filed for you, it's the process they are following, and they will issue in a due course.
Okay, thanks.
शालिनी जी आपका होल्ड किया गया, आपका 7 डिजिट है, 6 डिजिट नहीं है.
नहीं 7 नहीं है, यही प्रॉब्लम है, 5 डिजिट पे ही गड़बड़ हो रखा है. Anyway, thanks Palakji.
Thank you. Thank you.
Yeah, no, now actually Income Tax Department is checking whether the person is member of chapter or not. Otherwise, they are not granting refund. So if anybody, if anybody has not paid membership, renew ASAP before 12 o'clock. So you will get a silver coin plus faster refunds from income tax. So just on a human note. So let us begin the quiz. Are all members ready? Should we start?
जय सर, एक और क्वेश्चन पूछूं जरा, just last.
Sure.
Palak ji, you said one thing about this mutual funds from NRI account, that those are exempt for capital gains, right? NRO
Yes.
is not exempt.
No.
But can we?
Yeah. Please go ahead, ma'am.
Can we transfer from NRO to NRI and then do the transaction?
Very well. You have to prove the source that your fund is remitted from foreign country.
Mm-hmm.
Then it would be exempted.
Okay. Thanks. Yeah, Jason, proceed.
Perfect. So I'll host the quiz. You will get a QR code to scan. You have to enter your name, and then one by one we'll ask the answers. Before that, I'll just display the rules for clarity of everyone. So we'll do your filtration after the Kahoot. Hope it's fine. So members, you have to join using the QR code. Enter the game pin as shown on the screen. Enter your name and membership number, because that will be counted as a valid entry, otherwise not. And remember, time as well as correct answer both are important for the scoring. It's not only the correct answer. Time is also equally important. We have kept around 25 questions. 10 seconds will be allotted for each question. And in case there is any dispute, decision of managing committee will be final. So let's start the quiz. Give me a minute.
Jay, you can continue with yeah.
Sorry, Ajil?
Yeah, in the same window, you can go.
Yeah.
Yeah, same window.
There's a bar on my screen at the top. I'm trying to move it.
Okay. You can go there, continue with the down, yeah. Then you start. You can see the screen.
Yeah,
No, up
just
little.
a minute. There are some tabs on my screen. I'm
Yeah,
trying to move them.
Start. You can just click on start, little down. You can see the decoding.
Yeah, Ajil, you are seeing my screen, but there are some tabs which are
No.
hiding my icon. So I'm moving that.
Okay.
Yeah. Members, you can scan the QR code and game pin. We'll wait for 3 minutes.
MC members are not allowed to participate, right?
We can, Badriji, for knowledge purpose, but prizes won't be there.
Okay.
So those who are joining from mobile, they need to switch the screen to see the shared screen of Jai Bhai. Otherwise, you can use the pin 6472528. 6472528.
We'll wait for 2 more minutes for members to join. We'll start at 8:03.
What's the effect of it?
Last minute to join.
Only 50% of them joined.
Many have joined without putting their membership number.
They will give us prize then.
To the MC members, yeah?
Yeah. Last 10 seconds, then we will start. Let's start. Is my screen visible to all?
Yes.
Yeah. First question on the way. Under the Indian Income Tax Act, an Indian citizen leaving for employment as resident only if their India stay is 60 days or more, 120 days or more, 182 days or more, or 365 days or more. Let's see the next one. So Harsh has answered the correct answer and in the fastest time. So he's on 897 points.
Harsh, rename yourself.
Harsh don't want to be harsh, so that's why he is not renamed. Let's see the next question. Deemed residency applies to Indian citizen with total income more than 15 lakhs if they stay in India for 120, they stay in India for 182, they are not liable to tax, or they have been a resident in 9 out of 10. Let's see the right answer. Yash is on the top with 1731 point. Abhishek is on the second. Harsh moved to number 4. Still, there are a lot of questions to change the score. Moving to next. Under Section 6, Clause 13 of 25 Act, an NRI becomes NOR if non-resident in how many years of 10 preceding years? 7, 8, 9 or 10. Yes, again, right answer. He's on the top, leading the board. Ramesh is number 2nd. Let's see the next question. For an Indian crew member on a foreign bound ship, which document is primarily for computing stay in India? Is it passport entry stamp, or CDC, or employer register, or work visa duration? So correct answer is CDC, continuous discharge certificate. Let's see who has answered correctly. Let's see the next question. For a high value pre-existing individual account under FATCA or CRS, high value means aggregate balance exceeding USD 25,000, USD 500,000, USD 1 million, or USD 5 million. No answers till now. So the correct answer is USD 1 million. Let's see who has correctly answered. Rajdeep, he's number 1 on the board. Yash, number 2. Let's see the next question. A non-resident individual earns income from a business connection in India. What is the taxability? This we covered in the presentation also. It was covered by sir. So the right answer is only income attributable to operation in India is taxed. Let's see who has rightly answered. So it's Abhishek on number 1 with 3271 points. Moving to next. Income from the transfer of a capital asset situated in India is deemed to accrue or arise in India. This was also covered by sir as a part of DTAA sections that property will always be taxable where it is located. So it will be in India. Sam is on the number 1 with 3942 point. Next question. Interest payable by a non-resident to another non-resident is deemed to accrue in India only if money is used for So it will be taxable only if it is used for a business or profession carried on in India. So other member can continue giving loan to their friends, non-resident friends. So Sam is again on the number 1. Nitesh is on the number 2. Fees for technical services paid by Government of India to a non-resident are taxed only if services are rendered in India, exempt, taxed in the country of residence, or deemed to accrue. So correct answer is deemed to accrue or arise in India, irrespective of where services are rendered. So the right answer was given by Harsh. Harsh is again on the number 1 with Sam to number 2. Next question. NRI received 75,000 gift from a resident friend. This sum is deemed to accrue in India under which section? So right answer is section 9, clause 8. Correct answer was given by Abhishek. He is leading the scoreboard. Next question. Fund management activity by an eligible fund manager in India on behalf of an eligible investment fund, taxable or not? So it does not constitute a business connection of the fund. Right answer was given by, again, Abhishek. Moving to next question. Concessional tax rate on LTG arising from transfer of foreign assets for an NRI is taxable at what rate? So it's 12.5, which was also covered by in the presentation by sir. Let's see who is leading the scoreboard. It's Abhishek maintaining the position from past 3 questions. Let's see the next one. If an NRI transfer a new asset secured under Section 115F within 3 years, the previously exempted capital gain is taxed as long-term capital gain in the year of transfer. That's correct. Let's see who has answered. Harsh has again gained the number 1 position. Abhishek, you are on 2. You need to answer a few more. Correct. Moving to next question. So if you want to maintain the NRI status, a declaration in writing with the return of income is required. Let's see who has answered correct. Harsh is maintaining the number 1 position. Let's see the next question. Question number 16. 10 more to go. So the correct answer is deposit with a private Indian company, are not specified as said. Let's see who has answered right. Harsh maintaining the position, giving tough competition to others. Let's see the next question. Interest earned by non-resident on a non-resident account is exempt if the individual is a person resident outside India under FEMA. Let's see who has answered correctly. Harsh maintaining the position number 2, membership number 236555. Let us see who is this. Next question. The income of a foreign company from storage and sale of crude oil in India is exempt if this might be applicable to a couple of employers of our members. So the right answer is it is exempt if it is in national interest and notified by central government. Let's see who has answered it correct. Harsh maintaining the position. Next question is the presumptive profit rate for non-resident engaged in the business of operation of ships is taxable at what rate? So the right answer is 7.5. Again, Harsh maintaining the scoreboard, but Nitesh and Kushal have entered the leading 5. What is the TDS rate for income payable to a non-resident sportsman for participation in any game in India? Recently, sir, our members also went to Bahrain to play the cricket tournament, but I think we forgot to deduct TDS on their income. So the right answer is 20% plus cess. So Harsh leading the scoreboard, Mr. Nitesh on the number 2 and Kushal on the 3. Every person making a payment to a non-resident must furnish information in which form? Form 145 Part ABC. Harsh, did you have answers already with you? We need to make a committee for it to check.
पेपर लीक हो गया क्या?
Question number 22. Sorry?
मैं
Under
बोला
the 2025 Act, the
पेपर
right answer is Form 144. Harsh maintaining the position. Kiran number 2. Nitesh number 3. Kushal and Rajesh 4 and 5. Question number 23. Right answer is interest on long-term bonds listed on IFC Stock Exchange. I guess Harsh still number 1. Yes. Last 3 questions. Question number 24. Which form is used for a non-resident to apply PAN? Non-resident and not even citizen. So right answer is Form 95. Harsh is again on the number 1, Rajesh on 2. Second last question. Form 162 is the right answer. Still maintaining the position. Last question. So right answer is Form 41. Let's see the final scoreboard. So Nitesh is on number 3. Rajesh is on number 2. And as we know all, Harsh is on the number 1. And runner-ups are Kushal and Kiran. Congratulations, Harsh. You have got 2 prizes. One I can definitely share with you, that because of your expertise, you will be definitely given one session to speak on, again on Indian income tax for the members. And second, committee will decide and we'll let you know in the next CP event. Congratulations. Give me a minute. So coming back, sir, we want to really thank you for all your time and the knowledge shared with our member. We would like to felicitate you online, since we are not meeting in person, with an online certificate. I would request all members through their reaction if they can appreciate the time given by the speaker.
Thank you, sir. So as I mentioned, we would have loved to host you personally here in Muscat. So let's plan for a face-to-face session as early as possible. Because members still have many questions. Maybe we'll send those questions to you over email, and your responses will be shared with the members. Thank you for all your guidance. Thank you very much.
Yeah. Thanks a lot, sir. So moving to the last part, I will now hand over to our Vice Chairperson for vote of thanks. Sangeeta ji, over to you.
Thank you, Jay. On behalf of ICAI Muscat Oman chapter, I would like to extend a heartfelt appreciation to all for the conclusion of today's insightful online CPE, which is dedicated to all of us as NRIs. First and foremost, my sincere gratitude to our esteemed speaker, CA Palak ji, for delivering such a comprehensive and enlightening session on decoding NRI income tax returns. Your deep expertise, practical insights, and clarity on the complex aspects such as selection of ITR forms, the new and old regime, the deductions, the disclosures and the compliance which are required by us as NRIs have truly added immense value, I feel, to all of us who have attended the session. And the way you broke down those complex topics into such simple and relatable explanation is truly commendable. And this shows, I would say, is your excellence not only as a tax expert, but also as an outstanding teacher. Just as Jay had also said that, it is from you that he has learned all aspects and provisions of direct taxation. So we are confident that today's session will greatly assist all our members and participants who have attended today's session in navigating the NRI taxation with greater confidence. Along with this, I would like to extend my gratitude to CBFS for always supporting the chapter as a sponsor. And at the same time, I extend the appreciation to all the members who have supported the chapter in the form of corporate or any other type of sponsorships. We also thank all the participants who have joined us today and actively engaged in the sessions, as well as at the Kahoot quiz. Your enthusiasm and interest has made this program and event meaningful and successful. A special note of appreciation to all who have and the technical team for the seamless coordination in conducting this program on Zoom platform as well as the Kahoot quiz. Such knowledge sharing initiatives are vital, especially in today's evolving regulatory landscape, and we are committed as a chapter in bringing more of such relevant sessions to all our members. Thank you once again to everyone for your time and participation.
Thank you, everyone. Thank you, Sangeeta ji. Thank you, sir.
Yeah, we can stop the recording.